Good afternoon, everybody. My name is Lebogang Mokhabudi, and I am the South Africa Country Manager. A warm welcome to all our attendees here today. A warm welcome to our startups, our fintech startups, our circle of investors, and the corporates that are joining us here today. As the health and economic effects of COVID-19 continue to shake South Africa's economy and the rest of the continent, it is urgent to chart a path to an inclusive recovery that works for all. South Africa's micro and small enterprises market includes 5.78 million enterprises, most of which operate in the informal retail sector. COVID-19 has severely affected these micro and small enterprises, which are more vulnerable since they lack access to digital tools and financial services. According to BFA's research, 75% of MSEs lost income, 84% anticipate to not being able to pay off debt, and most will only be able to continue operations for about 6.5 weeks. Informal, micro, and small enterprises are crucial to fostering inclusive growth in South Africa's townships. And in this environment, agile fintech innovators have the opportunity to develop solutions tailored to the needs of informal small businesses and drive an inclusive economic recovery. Our agenda for the day will include two panels. First, with female fintech innovators operating in the township economy, and the second, to discuss why banks and FMCG companies should partner with fintech startups to reach informal markets. We hope these discussions will provide an impetus for more partnerships, innovation, and more collaborations to come. First, a couple of logistics. Please feel free to use the chat function to comment and ask questions. And do let us know your name and your organization when you engage. We look forward to engaging with you, and there will also be poll questions. Let's perhaps start with the first poll. Please tell us who you are. Let's get an understanding of who we have in the audience. Lots of entrepreneurs. Some investors. Thank you, investors, for joining us here today. We have some researchers as well, representatives from the bank, regulators, and policymakers are with us here today, as well as other. I wonder what other means. Please do not hesitate to tweet any quotable quotes and use the hashtag inclusive fintech, the hashtag township innovation, and the hashtag road to recovery. I would now like to invite Maylise Carrero, the steward of the Global Ship, the director of Catalyst Fund that operates in 5 emerging markets: Nigeria, Kenya, India, Mexico, and South Africa.
Great, thank you, Lebo, and welcome everyone to this digital dialogue, like all events these days. So I hope that we're going to keep it engaging for you all, and as Lebo said, feel free to use the chat to ask any questions at any time. So I'm here to give you a little bit of a background on Catalyst Fund and why we're really excited to facilitate this event today. So, and obviously, I think I'd like to start also by thanking our funders that are making all of this possible in the first place. That is JP Morgan Chase and UK Aid. You'll hear from Colleen from JP Morgan Chase shortly after. And without them and their support, we wouldn't be able to actually host these events. So we're very grateful. So Lebo, as you rightly said, informal micro and small enterprises around the world and in South Africa especially are really crucial to fostering inclusive growth. And especially so after COVID-19, where we've seen that they have been the hardest hit by this crisis. Informal SMEs, gig workers, those that don't have regular incomes. So from our experience, what we see across emerging markets is that this vulnerability really comes from not being able to successfully leverage and access digital tools and digital financial services that could improve their resilience, that could allow them to continue to operate in a digital format, even when their shops have to shut down. And this is because most solutions are not actually tailored to their needs of informal SMEs in emerging markets, and or not even there, like, and full stop. So this is why actually Catalyst Fund exists. Our mission when we were created in 2016, so now almost 5 years, like four years ago, was to really enable the creation of affordable, accessible, and appropriate solutions for underserved small businesses and individuals in emerging markets. And we wanted to do so by solving the critical challenges that entrepreneurs face, so by accelerating the innovation necessary to create such solutions. But we're not a typical accelerator like many others that exist. And that's because we couple catalytic grant capital, which can be used flexibly by the entrepreneurs however they want. Some of our portfolio companies could tell you more. They're actually here in the room with us today. And we couple that with bespoke venture building support from a team of local and technical experts around our markets. So in South Africa, Lebo is the steward of that work, but we also operate in our other key markets. And thirdly, we also curate connections with ecosystem players such as investors, corporate innovators, and other critical ecosystem players that can help them scale. And we strongly believe that capital is only one side of the equation, which is why we enabled the creation of this very deep venture building program, where we can be in the trenches with the entrepreneurs, building the solutions that are meeting the needs of the underserved. On the other end, though, startups also need a thriving environment in which they can operate and scale. And it's not enough to just say, you come to this program and things will be fine for you. So we decided to launch a set of ecosystem acceleration strategies, so across South Africa, Kenya, Nigeria, Mexico, and India. And we have three main goals that many of you in the room have actually helped us achieve and continue to work on. The first is unlocking more capital from investors through a circle of investors. The second is enabling pathways to scale via partnerships with corporates. And the third is to continue to fill the talent gaps that startups feel by having partnerships with local talent networks and local universities, so that youth has the job opportunities they need at the startups to see that there is potential in this sector. So over the past 4 years, it's certainly been a journey of growth and of learning of what works and what doesn't work across markets. And we've worked with 37 companies. I'm often surprised by this number myself, since 2016, most of them across Africa. Here you see the portfolio. And I like to single out in particular the companies in South Africa. So we worked with Mobilife, offering affordable digital insurance, all via phone, to low-income individuals with a partnership with Standard Bank, who's also joining us today as a panelist. We supported Abalobi, who's linking fishermen to restaurants via digital marketplace. Pay Me Now, who's offering salary advances for low-income workers to help smooth incomes. Meerkat, who's helping people consolidate debt when they're over-indebted, for example, and also save over time. And obviously Spoon Money, offering credit and savings for informal traders in the townships. And you'll hear from the founder, Nikki, in the panel after this, so I won't steal her thunder. So these companies have been incredibly successful. So far, they've gone on to raise 81 or even more now, $1 million post-acceleration. And they've reached over 2.5 million customers around all the markets in which we operate. And 90% of them are actually still in business, which is quite atypical for an accelerator. And all this in spite of the pandemic and all the challenges faced by early stage companies. But obviously it's not enough. And I think that it takes a concerted efforts across all the actors present in this room, in the ecosystem, to support innovators, especially those tackling these hard challenges. like serving informal SMEs in the township and informal economies in our markets. So thank you for being here. We hope that this discussion will provide an impetus for more partnerships and innovation and collaborations to come, because it's sorely needed. And with that note, I'd like to pass the mic to Andile, who's the ecosystem manager at AlphaCode, our partner in this event.
Thank you, Maëlys. It's a great pleasure to be here with you guys and also to partner with Catalyst Fund for this particular conference. It's something that is actually part of what we've always phrased for AlphaCode, being able to identify, partner, and grow financial services, innovative financial services businesses, as you'd see on the slide. So for us, the story of AlphaCode is important to tell because it also fits into how all of this work matters. It was founded through RMI, looking at how do we better enable financial services innovators to tap into the established ecosystem for financial services in South Africa and help them also grow with not just the capital that is injected as grant funds, but also the support. So the same way that a Catalyst Fund is enabling the guys to grow their businesses through mentorship and the connection to the rest of the network, we've done similarly with our incubator program. Through that program, there is actually a shared business with Catalyst Fund being Spoon Money, and that just shows for us that it's not about events only that we speak about collaboration. It must also be merited through the actions that we've taken prior to and even after events like this. So from our side, we're looking forward to having this discussion also on the back of just having opened up the incubator program applications for our 4th intake, after having already had 30 businesses through the program, 30 million Rand worth of grant funds given to the guys. We wanting to see what financial services innovators in the South African landscape can do for sectors like the township economy. It's a space that's always spoken about as needing much innovation, and there are people on the panels here who've done that. Also, you have the corporate angle, which for South African innovators is something key, because the B2B play for financial services is something a lot of entrepreneurs want to understand and see how to actually navigate. So I encourage people to be very attentive to how things have happened. So what are the lessons learned? What are the challenges that both parties have faced? And let's see how much more we can improve that. At no other time has it been more imperative to actually foster that kind of collaboration between corporates and startups than now. If we're truly wanting to get to a point of having recovered and renewed innovation, this is the point at which we need to start really engaging meaningfully for that growth. So hopefully everybody enjoys the platform. And as Lebo said, social media keeps the conversation going. It's not about a one-day conversation. It's ongoing for as long as we need to innovate, which is perpetual. So thank you again.
Thanks, Andile. And it's been a pleasure to work with you and AlphaCode, working on Spoon Money, as well as the entrepreneurs in South Africa to, as you rightfully said, grow the economy further and collaborate to really ensure a thriving, inclusive fintech economy in South Africa. We at Catalyst Fund are funded by the Foreign Commonwealth and Development Office, as well as the JP Morgan Chase Foundation, and so grateful for all the support that we've received thus far. Thank you to our funders. I would like to welcome Colleen here with us today, the Vice President of the JP Morgan Global Philanthropy in EMEA, to share with us her commitment to South Africa as well as Catalyst Fund. Colleen.
Thank you very much. I'm very happy to be here and to speak with everyone today. It is not lost on me that I represent JP Morgan, one of the oldest financial services institutions in the world. We've been around for more than 200 years, and probably many people in the room, their businesses have probably been around for less than a decade. So in some ways we represent, a really strong past, and I think that a lot of people in the room represent the future. So I'm really happy to be here today and to talk to you about our commitment to supporting communities. Around the world, JP Morgan Global Philanthropy is applying our model for inclusive economic growth based on common elements that communities need to thrive. Young people need the skills to succeed in the workforce. Entrepreneurs need the resources to start and grow thriving small businesses, and individuals and families need the tools to become financially stable. Economic opportunity is out of reach for many South Africans. who lack resources that can help put them on a path to great careers, or build wealth, or grow a business and participate in the benefits of an expanding economy. Since 2015, we've invested 18 million US dollars, or 250 million Rand, in programs to improve economic opportunities for South Africans. This includes programs like We Think Code, which supports 75 young women from disadvantaged backgrounds to become software engineers, and Black Umbrellas, which is supporting over 25 entrepreneurs from Soweto Township to grow their business and create more jobs. On behalf of JP Morgan, I'd like to thank Catalyst Fund Director Mylis Carraro and South Africa Country Manager Lebo Makabudi, and the team behind the pioneering efforts of Catalyst Fund's Fintech Accelerator, who we've supported over the last 4 years to accelerate entrepreneurs growing solutions that improve the financial health of underserved communities. Despite progress to lift people out of absolute poverty, too many are being left behind, even in cities and countries experiencing vibrant growth. Supporting efforts to close the gap between those that are prospering and those that are not is the driving ambition of JP Morgan's philanthropic mission. As we all know, sound financial health is the foundation that builds strong households, communities, and economies. Yet more than 1 billion people around the world are still struggling to manage their financial lives. As a large global financial services company, we believe that we're in a unique position to improve financial health of people who need it most. Last year, we made a commitment to give 125 million US dollars philanthropically over the next 5 years towards efforts around the world to help people build savings, reduce debt, and achieve financial goals. And in doing this, we've seen two important fundamentals. First, the application of technology to power solutions. Second, lessons learned and shared between different communities facing similar challenges. The impact of COVID-19 on South Africa's economy has already resulted in an estimated 3 million lost jobs, with estimates that women account for 2/3 of that and youth half of that. The 2008 crisis for context took 2 years off of progress for employment. So we know the road ahead will be tough, and the township economy is more important than ever to revitalize, especially when faced with declining formal sector employment. To help assist the country's hard-hit communities, JP Morgan committed 21 million Rand during the COVID crisis to help hard-hit small business owners such as food retailers and women to weather the impact of COVID-19. And we collaborated with nonprofit organizations like Finmark Trust, Gordon Institute of Business Science, Smart Start, and even fintech lenders like Profit Share Partners. We were helping entrepreneurs through these partners to access loan payment relief, to get online coaching and critical resources like legal services and e-commerce platforms to continue operating and participating in commercial activities. We also were providing emergency relief to vulnerable youth and their families facing hunger. The methodology started to change though with the digital applications, and in such an intense time when you need to get money on the ground and impacting lives, when people are facing hunger tonight, we were able to use technologies with our labs and their Zelto blockchain platform so that we could assist people in townships to access goods, essential services, food, electricity through a text message. It was really incredible to see that. And one of the examples of some of the tech applications and how important that is for township revitalization was Braben, which runs a distribution business that sells mealie meals, the cornmeal. And the COVID-19 pandemic prevented Ben's retail customers from making enough money to purchase his supply. So spaza shops no longer had the means to trade with him. And he was concerned about money getting tight. So he registered on Redshift's e-commerce platform. And that platform, in collaboration with Finmark and JP Morgan Chase, enabled Ben to digitally connect to an even broader customer base, earning him business in additional townships too. So through this, he actually resulted in having more income than he did pre-COVID-19 because he started to digitally enable his business. Having access to financial services is a critical step towards reducing poverty and inequality. And data on mobile phone ownership and internet access show unprecedented opportunities to use technology to achieve universal financial inclusion. so that nobody feels that they can't access these really critical services. And we've seen great strides around the world in connecting people to formal financial services. Financial inclusion allows people to save for family needs, so food, shelter, education, to borrow to support a business, or to build a cushion against emergencies, particularly important during a pandemic and a health crisis when you might have unexpected health costs to pay for. South Africa's highly developed financial infrastructure and mobile technology mean that there are commercial opportunities to solve social challenges and connect millions of underserved to financial services. And I'm really excited that we're going to hear from innovators in the room that see that there are commercial opportunities in solving social challenges like Spoon and A2Pay and Yebo Fresh. And more importantly, that corporate partnerships that we'll hear from in the second panel. Because in order to solve these deep-rooted social challenges, we need public, private, and social sector collaboration to lead to better outcomes and improve lives. No one will solve this alone. We have to work together to solve it together. And we're very much delighted to be a part of this event in South Africa, a hub of innovation and mobile technology, and home to a number of globally focused investors, corporate leaders, and talent, all looking for ways to support the growth of financial inclusive fintech. So thank you.
Wow. Thank you so much, Colleen. Wow. I love what you said about this is a hub for innovation, that South Africa is a hub for innovation. And especially what you said, that there are commercial opportunities to solve social challenges. And as you rightfully said, is that we have innovators here who are doing just that. So perhaps let's go into the first panel of the day to discuss affordable, accessible, and appropriate solutions for the township economy. We have Nikki, the founder of Spoon, Jessica, the founder of Yebo Fresh, Tina, the COO of A2Pay, all female innovators operating in the township economy. Welcome, ladies. May I ask you to all switch on your videos? You do, fantastic. Please introduce yourselves. Tina, please also switch. Thank you very much. Please introduce yourselves, ladies.
Shall I go first, Level?
Go ahead.
I'm Nikki Swartz. I'm the founder of Spoon Money. Spoon is a social enterprise working very specifically with women, informal traders, in urban-based townships here in South Africa. And we provide a saving and credit solution into them in order to help their transition from subsistence to more stable and sustainable enterprises.
Thanks, Nikki. Jessica, please introduce yourself.
Hi, I'm Jessica. I'm the CEO and founder of Yebo Fresh, probably the youngest company on the panel. We are 2 years old. We are an online grocery shopping and delivery service with a passion for delivering good access to good food for all South Africans, and particularly focusing on the townships. We deliver a wide range of customers, everything from a small vegetable combo to a family, to 300 kilos of frozen chicken to a township fast food restaurant, up to thousands of food parcels to NGOs. So quite a wide range of customers that we serve, and very happy to be here. Thank you, Lebo.
Thanks, Jessica. Tina?
Hello, everybody. Please excuse my scratchy voice. It's just one of the consequences of the time at the moment. I'm the COO for A2Pay. I've been there 5 years. A2Pay is a fintech company, and it's been providing technology solutions into the primary market. We don't refer to the informal sector or the township economy. We refer to it as the primary market. We think language is important to understand how it influences things. So we've been providing technology solutions into that market for the last 10 years. We've been a trusted jobs fund partner for 6 of those, and we are focusing specifically on the spaza shop market with entrepreneurs. Our mandate is to reduce the barriers to sustainable employment through the application of technology, and then catalyze financial and economic inclusion. And our whole project is designed around working on those 2 critical focus areas. So far, we've got 2,000 sites operating in South Africa nationally. We're in 4 main provinces. We've got a team of 85. We'll probably grow to about 120 in the next quarter or two. Our plan is to onboard 6,000 to 10,000 sustained businesses in the next 3 to 5 years. And we execute and onboarded roughly about 500 to 700 new spaza shop traders per quarter. So we've got a strong execution muscle. And our real mandate is to evidence sustainability. One of the ways we do that is by providing access to capital. So we'll talk more about that a little later on.
Fantastic. Thank you so much, Tina. And for those in our audience who are not from South Africa, let me explain what a spaza is. A spaza, a spaza is a informal is a small shop, like a mom and pop shop that you either see in Kenya, even in countries like Mexico. We have mom and pop shops. So a spaza is really a small business selling fruits and vegetables, as well as some essential goods. And in South Africa, we call them spaza shops. Nikki, one of our companies in our portfolio, Spoon Money, let me start with you. Please explain to us or help us better understand why you chose to provide a solution, a financial services solution to female informal traders.
Yeah, so I have to say, not only am I a Catalyst Fund portfolio company, but also an AlphaCode portfolio company, indeed. The beneficiary from both horses. So thank you very much. You know, all of the evidence is that, certainly in the developmental world, that is if you can build a sustainable income stream for a household, you are more likely to have better social outcomes. And that's really been the foundation of our thesis. And when we're thinking looking at the South African context, we have a plethora, regrettably, of female-only headed households. And we just thought this would be a moment for us to be able to catalyze those better social outcomes. And we happened upon, I have to say, informal traders as a means of doing so. You know, we started life working specifically with stokvels, which, although certainly they have a female bent, we weren't thinking specifically about women. But looking to, when we started to get into the credit space, we recognized also that all the evidence pointed to them being better payers, frankly. And so that suited our kind of commercial sense equally well. So both this kind of social outcome idea, because of women-headed households, and from a commercial point of view, that they're better payers. So that really did work well for us.
Okay, that makes sense. And as you rightfully said, women, you know, are part of stokvels. And again, for our audience, a stokvel in South Africa is basically a savings group, much like you have a SACCO in Kenya, or it's a savings group of women where women come together and contribute money together and save towards buying something either at the end of the year or as an emergency emergency response tool. But from a COVID point of view, I would assume that a lot of the traders were affected, right? They were affected, not even I would assume, they were affected by lockdown, by COVID-19. How did you respond as a business to your traders?
Yeah, COVID has been an unmitigated disaster for the sector, I will say. And I think the difference between, I suppose, Tina's sector and ours is that we almost think about our customers as being a notch further down that so-called pyramid, just to give everyone some context. So these are very, very informal businesses, literally hawkers, women sitting on street corners or outside of their homes or selling at taxi ranks. And really their businesses thrive on footfall for a start. And with lockdown restrictions, certainly in the very early wave of lockdown, they were shut down. They simply couldn't trade. And that really was a disaster for them. So our response to that was multiple-fold. Firstly, we engaged with the city to understand the extent to which we could actually help them get more formalized permits and licenses, because as lockdown lifted, very specific sectors could actually start to trade with licenses. So that was something we engaged with the city on, and were able to accommodate some of our customers in that way and get them back to work. Secondly, we were able to, I guess like most banks, go to our, to our segments and go, how can we help you? Being a credit company, I suppose we can leverage things like payment arrangements. We lowered the cost of credit to all our customers across the board, in order for them to be able to, just to be able to help facilitate some of that repayment. And we also just try to find opportunities for them to be able to work. So we have a whole bank of customers who in fact sew. And so we initiated, there was masks, there were tenders from the formal sector to, to sew masks and provide masks into the public sector. And that's precisely what we did. So just really acting as a facilitator in that role. So yeah, it did feel multiple fold level to the extent of also partnering with some other partners to provide, food vouchers and electricity vouchers, and really trying to be a partner to our customers.
And I found it really interesting that even during COVID, that people still continue to pay their interest portion. As you said, you reduced it to pay interest, and as you said at the beginning, also that women, pay back their loans. That even during the season, the women continue to pay back their interest portion. But also to iterate what Colleen said about public and private partnerships, that you worked with the municipality, you worked with government partners to ensure that your businesses were either formalized or could continue to trade in one way or another, whether it's selling masks or something else, but let's help them generate more revenue.
Absolutely. One of the first restrictions that was lifted in the sector was from cooked food to live food, so an awful, and being the entrepreneurs that my customers are, they may have been selling clothes prior to lockdown, but come lockdown, they were into selling chickens because that was one of the things that was allowed during lockdown. And so it was really, the successes, certainly from our point of view, being able, having customers that still paid. That we think is a real success, this commitment to continue to pay off loans, but equally importantly, the commitment to keep on saving. You would think under the circumstances that the first thing to go would be this extra cash, because saving is very much discretionary exercise. But in fact, a high proportion of our customers continue to save, which we thought was extraordinary.
That's fantastic. And Tina, you offer stock management tools to spaza owners whose trade was also affected during lockdown, right? Affecting their revenue as well as their ability to restock. Yeah. How did you respond to spaza owners, and how did you help them, I guess, with ATPay solutions?
Okay, thanks, Lebo. So essentially our project tries to solve 5 major pain points that most SME traders struggle with. So the first is isolation. The second is a lack of access to technology and training. The third is lack of access to financials or access to capital. The fourth would probably be competitive pricing, being able to benefit from bulk buying. And fifthly, they work in an environment that is highly unregulated. So they're often at the mercy of a lot of other issues. And when we put our project together, obviously the technology and the training, which I'll explain further down the line in the event, allowed us to build a profile of our customers. So, and I'll explain that in due course. But essentially, there were 2 elements that we noticed with regards to what happened with COVID and our credit offering. The first was that we continued to provide access to capital. We just reduced the amount slightly, and we reduced the term to protect both ends of the exchange. And people continued to pay it off. Okay, so that was really heartening. Secondly, because our technology solution allows us to view the transactional performance across the base, we could actually see in real time what was happening per spaza shop, per region, per area across the country, real time. So the first thing that happened, which was terrifying, was that 30% of the shops stopped trading because they were denied a permit, or they were selling hot food, or they were selling alcohol, or any of the other issues. Secondly, the shops that could or would remain trading, we saw their grocery sales drop quite significantly as well, to a similar percentage. And this was also because certain products were banned and there was less footfall. Conversely, there was an increase in the sale of virtual products, which now meant that they were selling more virtual products, which is airtime, electricity, DSTV, and various other things so people can understand that, at a much reduced margin. And their high margin products had dropped off. So we saw this immediately, overnight. We could watch it happening overnight. Every morning we pulled our reports, and it was very nerve-wracking. What we then did, because we understand this market well, we understood that in fact 1 week's worth of trade is what you want to help the merchant with. You actually want to help them have a week's worth of stock procurement. And we approached the job fund, and we were able to disburse a grant injection into, oopsie, I put it, there we go. Sorry about that. I put a timer on level because you told me not to waffle. Excuse me. So there we go. I'd reached my 2 minutes. Not sure I'll live that down. Okay. So basically, what we did was we then went and accessed capital from the job fund, from Treasury, and we disbursed 21,000 Rand into each spaza shop over 3 months, over 90 days. Which is really the equivalent of 1 week's worth of stock procurement. And so we reached 1,800 spaza shops. We put 21,000 Rands worth of grant capital in them. We made it conditional. This was money to be used to retain your operators, to run your business, and to buy stock. And the truly extraordinary thing was that as the level lockdown reduced, we saw this grocery sales increase. Our grocery sales increased by 130%. So in this bizarre kind of pandemic, access to capital could produce the most extraordinary results. So really what we were able to leverage was we were able to deliver quite a chunky amount of money to the right businesses at the right time in the right way. And that just allowed, we really do think we have managed to retain 95% of our base, which is about 1,900 spaza shops.
Wow.
And it means that we have able to retain those, keep them trading, and they in turn are supporting 2 or 3 families.
Wow.
So I think that's how we operated. It was incredibly difficult. We need to evidence everything, but the speed at which we could work and the scale at which we could reach was incredibly heartening. And then to be able to watch the numbers day by day, watch the numbers day by day. Merchants came back online trading. We could actually see the number of sites increasing, people getting access to this capital and using it for the right stuff.
Wow. So you leveraged your relationships with spaza owners, leveraged the digital tools that you already enabled spaza owners to have, leveraged the transactional data that you already had with the spaza owners, and extended working capital to them. And as you said that, your focus was to ensure that they trade for at least 1 week, right? And that 1 week you saw the impact on their businesses immediately.
Absolutely.
And
so just providing, it wasn't even
that's fantastic. So you
it wasn't, sorry to talk over you, it wasn't that we even wanted them to trade for 1 week. Just the capital injection of stock, just being able to provide them a cash injection to the value of about 1 week's worth of stock. Fundamentally, it pretty much secured their sustainability through the pandemic.
That's fantastic. So you enable them to also create a digital financial identity, right? Which will enable them to then access credit going forward, whether from you or from other lenders within South Africa.
Absolutely.
Jessica, let me not leave you out of the conversation. Jessica, from Yebo Fresh, you offer last mile delivery of groceries to townships. And in my experience, the cost of customer acquisition, as well as challenges associated with customer adoption, generally deter people from operating in informal segments. How have you achieved traction in the township?
Thanks, Lebo. If it's okay, I'll spend 2 sentences on township shopper behaviors.
Okay.
So I'll explain why we exist at all. So especially for non-South Africans, townships typically tend to be quite dense. And traditionally, the retail square meters in terms of formal, say, malls and shopping centers built on the outside are 6 to 10 times lower than in your average upper market. Meaning that how we see people shopping, month end, the big shopping trip is mostly done by taxi, traveling to the other side of town for that mall, for that big shopping trip, standing in line 45 minutes during lockdown, up to 6 hours, to then carry back the big shopping trip of up to 60 kilos of groceries, again in a taxi and carrying them back. The top-up shopping trip, which is incredibly important, the day-to-day work is often done at the street hawker or at the spaza. So what we set out to solve is that problem, not of the spazas and the street hawkers, not to compete with them, but to attack that big, heavy shopping trip month end, which is always done physically. Online shopping was something that did not exist, although if you look at this trip, it seems to completely make sense, right? Instead of thousands and millions of people getting into that taxi, traveling to the other side of town, let's turn it around. Let's have them order via, in this case, WhatsApp. We'll do the centralized packing and bring it to the customer to save time, money, waste, and generally create a safer shopping experience. But indeed, it was all new, and nobody ever heard of online shopping in this market.
Yes.
So the 3 things that turned out to be of vital importance for us was, first of all, to deliver outstanding quality in product and services. If you have about 1/3 of your budget to spend, of your tiny budget to spend on food, you'll be extra critical in terms of the brands, in terms of the quality, in terms of how you spend it. So we found that we had to get it first time right, and we didn't always. So we had, paid some expensive school fees, but product quality, service quality has to be exceptionally high, higher than in my experience in the upper markets, interestingly enough. Second, being hyper-local is of extreme importance, because the townships each have their own dynamics, because there tend to be infrastructure challenges, there tend to be sometimes safety challenges. We found that having feet on the ground is absolutely indispensable, and that most likely, and most importantly, local feet on the ground, people who understand the dynamics of that townships, who are connected to the local communities. So we, in this case, hired tons of local owner drivers who are entrepreneurs themselves, who understand exactly how the township operates. And third, we like to call it shut up and listen. A lot of people come into a market believing that they kind of know how it works. For example, I've seen this in Kenya. I'm sure it works in South Africa. Myself, I've got 15 years of experience in logistics and retail in the upper market, and kind of thought, let me just bring this idea to the South African market. It was not like that at all. We had to kind of completely unlearn what we knew and just sit with people and listen and really hear from the customer. They had to tell us how to run our business, in effect. And that was extremely powerful, and the most important way to, in the end, build that trust that we're gathering, and is now getting traction.
What you say is so critical, that it's important to understand the local context, right? Understand, yes, you can have a solution in Kenya, have a solution in another emerging market, but before you offer a solution in a market, really understanding the local context, the dynamics in South Africa, or the dynamics in the township economy, which can be different, right? And really connect to the people. You mentioned listening to the people to really develop a solution that is really appropriate to their needs, right? That solves their challenges, not according to what you think they need. So it sounds like you've done that really, really, really well. And you've built relationships and created trust, because definitely that's one of the difficult things in informal markets generally, or primary markets, as Tina calls it, that, you need to develop trust, right? Because they only have a little to spend, and they need to spend it wisely. But since we're talking about inclusive fintech and fintech innovations, let's talk about technology. I'd love to hear, ladies, how you have leveraged technology in your businesses. Anyone may start. Nikki or Tina?
Okay, so Lebo, technology has been a really big challenge from Spoon's point of view, and primarily because our segment is, I guess, just digitally unsavvy, if there's if that's a term. You know, the majority of our customers are middle-aged, very ill-educated, or very little education. Women, so that while they have a phone, it might not necessarily be a smartphone. In fact, almost certainly is not a smartphone. So that's been, from a customer-facing point of view, enormously challenging for us. You know, like in the world of fintech, you kind of build these amazing products, which is precisely what we did in the early stages, and promptly fell on our faces when we realized it was wholly inappropriate for our customer base. So quickly pivoted to a very much more high-touch kind of engagement with customers. So the answer to your question regarding technology is that it's all happened back end for Spoon. And in fact, Catalyst Fund has played a pivotal role in that regard, in that, you know, we have been building a credit company. It's all about the data. And so, you know, building the back end to be able to capture the right data, to be able to make the right credit decisions for our customers, and really understand their lives a lot more closely has been pivotal for us. So it's all back end, I'm afraid, nothing sexy that's kind of customer facing at all. And really early stage startup, still very much in the throes of, you know, using and trying to really do what we call kind of no code development with two founders that are very untechy. So that's been our tech journey. But certainly from a customer point of view, it remains a fairly high touch agent network model. And a lot of, frankly, low-tech SMSing, WhatsApping, if WhatsApp's considered low-tech. But that's, our primary means of communication with customers.
Great. And as you said, that even if you don't necessarily have tech backgrounds, right, but you still managed to have a solution. And I think that's where you leveraged the support from Catalyst Fund, where you leveraged our developers as well to build your backend solution, to really, you know, build a robust technology within your business, technical capability rather within your business, and focus on that backend technology. But on the front end, Tina, maybe you can help us understand from a digital onboarding point of view, what was your experience of enabling your spaza owners really to onboard them digitally?
Okay, thanks, Lebo. If you can keep the alarm this time so I don't startle myself when it goes off, that might be more professional. Wave at me if I'm overextending my time. Let's start with some of the assumptions about the project. So we based our assumptions, there are really four big assumptions. One is if you give the right people the right information, they will make the right decisions. Secondly, the primary market is where it's at, which is our language thing. Thirdly, technology changes lives and entrepreneurs create jobs. And with the mandate to reduce the barriers to sustainable employment and catalyze financial inclusion, we needed to bring it down to some fairly simple stuff. So those were our four assumptions. There are 150,000 spaza shops in South Africa, and about 30,000 of those are actively run by South Africans. And it's really important that we maintain that because of the money that flows into the local economy, which is really what we want here. We want to see entrepreneurs growing, developing, and the money moving around the local economy. So we went to market and we looked at what those pain points were, which I spoke about, and we developed a tool that is really a business tool for the spaza shop owner. It looks like a point of sale device. If you went into any big retailer, you would find the point of sale device there. You can scan your product in, you scan your product out, you run your sales. And what we did was we took this relatively big piece of technology and we did it for a very good reason, which is that we needed to ground the disciplines related to FMCG in a device. And a mobile device doesn't offer that kind of discipline. So on the front end, the technology solution was designed to provide the merchant with all the relevant access to their business. The biggest challenge to getting access to capital, you might be dealing with an amazing entrepreneur. And if you are a South African spaza shop owner at the moment, you pretty much are an amazing entrepreneur because you are beating the odds. So the challenge is building a trading history, building a portfolio of evidence that says this is who I am and this is how I run my business. So we built into that tool, in addition to a point of sale device, all the stock management control, all the reports on their sales. The biggest challenge they've got is stock control, getting your pricing right. So what are your top selling products? So it's not only about the revenues that the product works on, but it's very much about the FMCG disciplines, because running a retail environment requires massive dedication to the control of your stock and getting your pricing right and understanding your market. So on the front end, what we wanted to do was to make sure that that particular entrepreneur who is above all else amazing has now got access to the information around his or her business. And the astonishing thing is that finally, when people started looking at the numbers, they realized I'm running R1 million or a R2 million a year business. But when you are not looking at numbers and when you are not addicted to them, you're not a number fanatic. You haven't got that line of sight. So that was really the main focus. The back end, which was what we were totally surprised at, was the unintended consequence of solving that pain point, was that suddenly we could view the data. And this is why we could react so quickly to the pandemic, and we could react so quickly by making sure that we could deliver capital and support in a very meaningful way in the time frame. I know there were huge initiatives to actually try and get 3,000 Rand or 4,000 Rand out to a spaza shop. But if you really can look at the numbers of a spaza shop, you'll understand that in fact you need 10,000 Rand, because actually that's the level of stock you need to procure to keep your shop running. So at the back end, we are able now to look at what's actually happening with our base and our merchants, right down to site all the way up to national level. I'll talk a little bit about training later if that covers the point for you, Level.
Thank you, Tina. I feel like we can talk a lot about this topic, but unfortunately we don't have all day, and digitally it becomes a bit difficult to take people's time. To the audience, I really encourage you to please ask questions to these fantastic female innovators that I have today. Please use the Q&A tab or also use the comments. Maybe as the last thing, let's talk about partnerships. Right. What has your approach to partnerships been? To all the ladies, have you partnered with startups? Because partnerships can be partnering with startups, partnering with each other, right? Partnering with corporates or partnering with FMCG companies, maybe. What has your approach to partnerships been?
Can I say something on that, Lebon?
Sure.
In terms of partnerships, it's basically for us, it's the reason we still exist as a company. And in this case, two main things: partnerships with NGOs and partnerships with FMCGs. In the case of NGOs, we initially started off delivering to consumers, and then during COVID-19 started approaching a couple of NGOs, and this kind of got this avalanche effect, and we grew over 8,000% in 2 months, from several hundreds of orders a day or several hundreds of orders a month at that point to thousands of orders a day. So you can imagine just the incredible effect that had on us as a team, growing from 5 people to 50 people, from a small warehouse to a bigger one, all of that during lockdown. So a crazy period. The reason why I'm saying that is, in the end, what we did here was something I think amazing from the NGO's perspective. They realized that the best thing they had to offer was the local network on the ground and understanding exactly what the need was. They were not experts in logistics or in sourcing and packing and delivering. So they found a partner who was, which was us. And together we made, well, I could say magic happen. And all those amazing people on the ground were supported, in this case, by us and the talent and the capital we had behind us, which was incredible. Partnerships with FMCGs have been absolutely instrumental for us as well. Not only, of course, because of the volume effect, being able to negotiate with an FMCG and then bringing your prices down, which again then results into lower prices for your customers. But in this case, also interesting partnerships around data collection, around marketing for our customers. For example, marketing to street vendors, marketing to soup kitchens. These are products that we can provide you for free. Tell us what you think. We'll feed it back to the FMCG, and they learn. So it was very much a mutually beneficial partnership. So again, I think for us, we're so small and so dependent on all those partnerships to get to where we are, and we will be even more dependent on those partnerships to get to our next stage. And it's been amazing and instrumental for us.
Tina, did you want to add something?
Yes, I think that I think one of the things that allows partnerships to develop is the ability to execute. And I mean, we have a commitment in the business that we just never miss our target, we never miss our deadline. And so we build trust with our various stakeholders. So, you know, we obviously have a relationship with the Jobs Fund and Treasury, which is really extraordinary, and they are an extraordinary entity. But we've also partnered with SME, which is headed up by Ketso Gordon, which is corporate South Africa. And he understood this thing about having a relationship and having data. And it is through that we've been able to put a financial services company together with a developmental credit license and actually disperse capital and watch what happens to the actual shop when that is actually be able to evidence what happens with the injection of capital. So that's been really exciting for us. And then obviously we've had other partnerships with Harambee, for instance. We've used Harambee to recruit a lot of our people. We don't hire business coaches. We enable young people to come and work at A2Pay and then do coaching really by numbers, a bit like the Lifeline counseling model where you don't have to be a psychologist to be a counselor. So we really work hard at that. One of the exciting partnerships that we're working with now is specifically around formalization. So if you remember, the fifth pain point is around a lack of regulation. And we are partnering with Ekurhuleni Municipality. They are truly remarkable. And we have a partner with them where we will onboard and ensure that the merchant is then registered, has the right permits. We will even work towards getting to the CIPC SIPSA registration. And so this, and I think it's built around the ability to execute, do what you say you're going to do, when you say you're going to do it, and how you say you're going to do it. And once you have this trust and people can actually see the benefit, these really healthy relationships start happening. And finally, the last loop of that is working with business associations, where a business association is a clustering of concerned individuals who really want to try and make a difference, but often don't have the capital or the leverage to do it. And we work very successfully in KZN and actually in Ekurhuleni as well, because they're very organized. So that's really from a stakeholder perspective. And then, of course, partnering with the likes of Coke on their multiple ownership project nationally is very exciting. We work with Macro and Jumbo. So it's making sure you have strategic relationships that serve the pain points that you're trying to solve.
Great. And it sounds like you're all partnering in order to enable scale, right? And at Catalyst Fund, really part of our mandate is to enable pathways to scale and partner with corporates, with municipalities, with governments, partner with investors to ensure that entrepreneurs grow and they scale. And we've also received a lot of support from the SME Fund that you mentioned. They've definitely supported us. So thank you, SME Fund, if you're part of this audience, for the support that you've also given Catalyst Fund. But let me also give an opportunity for the audience to ask questions. So we have some questions from the audience. One from Homozo. He's asking, no, Hopozo. Asking, are there any intentions to look into the rural economy? From you. Anybody can answer? Tina, you said,
Okay. So,
yes.
So we've just moved out into Limpopo. I think we moved out there in the last month, actually. We'll have about 90 merchants by the end of the year in Limpopo. We'll then move across to Mpumalanga. And those markets provide a very different type of feedback loop. So the density is slightly less. But once we get our training program working, because really what we have to do here with technology, we haven't mentioned this prior to this, is to make sure that the adoption of the technology is done correctly. And once that adoption of technology is done, it's a bit like learning to ride a bicycle. Once you can ride a bicycle, you can ride a bicycle. And our job is really to facilitate that conversion act. And so we're very excited to see what happens out in Limpopo and out in Mpumalanga. We're also working in the Eastern Cape quite aggressively. So.
Okay, that's interesting because we actually have a comment from Khopotso saying, I'm currently conducting research in Limpopo. And he says the data is already showing the existence of a financial sector within the study of location. And he would like to explore how this could be enabled by digital tools. So perhaps Khopotso maybe connect with Tina either via LinkedIn or Twitter and explore that further, because they actually, going into Limpopo as well. Let me take another question from the audience. Juan, I hope I'm pronouncing that correctly, Juan. Juan asks, in your experience, have you seen a decrease in the ratio of cash to digital payment methods, considering the requirement for social distancing and reduced contact?
Was he asking it of anyone in particular level?
No, so anybody may answer the question.
So from Spoon's point of view, yes is the simple answer to that. I mean, our sector is very, very cash focused. Our customers live their lives in cash. They buy in cash and they're paid in cash. And they've certainly, and in fact, originally did business with Spoon in cash. And we have actively encouraged a move away from cash. And in fact, part of the big move that I think has just been consolidated through COVID, although we started it prior to COVID, was actually to move our business to be increasingly cashless. So we're not looking at mobile payments per se, but we certainly are looking at other means of payments that involve less literally handling of cash. And we've seen that really been consolidated during COVID. Yeah, definitely.
And then a question from Comfort as well as Mbusi about credit worthiness. So the question is the data that you're receiving to help you refine credit scoring capabilities? Any interesting approaches that you have learned? And really, how do you assess the credit worthiness of informal traders or spaza owners?
Maybe I can address that. So when we piloted our loan project, we wanted to test a couple of variables. So we tested youth, male, female. We tested with a stokvel. We actually tested with gogos who were over 70. We wanted to see if you gave a loan to someone over 70, how that would work. And then we also had to look at where people had a poor credit rating. So one of the things that our program does is it gives us a whole lot of information other than just the credit rate. So often when we pulled a credit rating on a merchant, they were surprised. There were people who knew they had a poor credit rating, but there were some people who were genuinely surprised. And it was small, irrelevant little things that they hadn't paid attention to. And they'd had a poor credit rating for this. So when we go into a negotiation around access to capital, this is a commercial exchange. It is based on, we have a national credit regulator license. We have a developmental credit regulator's license. We are able to disperse for working capital, CapEx, and expansions. And this has to be paid back. So what we do is we build a portfolio, we build a history, we build a story of our merchant, which is based on trading patterns over a period of time. It's based on the revenues that we can see, and then it is based on behavior, because behavior is it's nudge economics, it's behavior, okay? So, and the behavior is around, if the person is prepared to book their bread in every day, that is a real discipline. worth recognizing. If they are prepared to cash up every day, if you can go into that shop and audit and say, please do a stock take for me, I'd like you to count the stock and can we look and see if it reconciles on the machine. So we have a whole lot of indicators before we even get to the credit score. And then what we do then is we wave it all up. Okay, so some merchants, bless their heart, come and say, could I have 250,000 Rand? And we smile and we adore them and we say, no, but we are going to provide you with 16. Let's see what you do with 16. What we've seen is that when you can have a meaningful and informative conversation with people about their financial, as you call it, digital footprint, but in this case, their financial history, once that capital is dispersed to the merchant and they know that someone is there to help them, we see an improvement in their disciplines in the business. We see an improvement in their financial literacy. We see the business sustained. None of our loan recipients even wavered during COVID. Not one of them wavered during COVID. We see a legitimization, which is the most exciting thing. We see people feeling validated that they can actually get access to capital. 15% of our merchants open second shops. So the important thing for us is to make sure that we are having a meaningful exchange with the merchant and that they understand clearly this equals that. Just because there's a poor credit rating does not mean we won't loan, but prudence in everything.
Great. There's so many questions, so many comments. We really could continue, but unfortunately we cannot. So ladies and gentlemen, please get in touch with Tina Mason from A2Pay, Nikki Swartz from Spoon Money, as well as Jessica from Yebo Fresh, and they will continue the conversation with you. Thank you so much, ladies, for your insights, your experiences, and please continue, charting forward in the township economy. Thank you so much.
Thank you, Lebo. Well done.
Thank you, Lebo.
Thank you. I'd now like to invite Mylise Carrero, who will be moderating the next panel, where we will be discussing partnerships. And as you heard in the first panel, partnerships are necessary for scale. Mylise, over to you.
Thank you, Lebo. That was fantastic. I think it's tough to follow 4 incredible women leaders in the fintech space, but we shall do. So I'd like to invite all of the panelists in my panel to turn on their videos. Thank you. Perfect. And we'll actually also turn off the slide so you can see us all better. But joining me today in the second part of the event, we're actually going to dive deeper into the question of partnerships. So should banks and FMCG companies in particular, but corporates broadly, take a chance on these fintech startups to reach informal markets? I think Jessica put it very well, and she said that without a recent partnership, they wouldn't even exist as a business. Was that right, Jessica? And that led to 8,000% growth in the business. So it's clearly extremely powerful. And yet we know that it's also hard to make them work. We at Catalyst Fund, we do try to connect startups and corporates so that on the one hand, we're helping the companies scale, and on the other, we're helping the corporates extend their reach, access data, or even access new markets entirely. But it's not an easy thing, and the process can be quite long and cumbersome. So we're gonna go into those details and hopefully provide tips for the startups in the audience and also corporates in the audience. So welcome to Ryan Cohen, the co-founder and CEO of Merchant Capital, to Kamisha Naidu, e-commerce and B2B manager at Unilever in South Africa, and Namdi Aranye, head of payments at Africa Standard Bank. So let me reduce this. Hi, everyone. Good to see you.
Good to see you too.
So let's start by talking, I think, about opportunities. And all of you are actually pioneers, I would say, in the partnership world, so to speak. And I think we need to really explore what are the opportunities are for partnerships to enable access to informal markets. And both Unilever and Standard Banks have extensive experience partnering with startups. So let's start with Kamisha. As a leading FMCG company, you've partnered with many companies. In fact, some of them are in our portfolio, like Soko Watch in East Africa. How have these partnerships expanded your reach to small businesses? And what has made them successful or not? Because we also like to talk about failures.
Yes, that's where we learn the most. So I think it's important, Melissa, that I take a step back with the why. So as Unilever, we've been quite unwavering in the last 5 years of our commitment to get our products available to citizens in every part of the country, most specifically within the township environment. And it's because of that goal that we find ourselves in the space where we've tested and trialed lots of different routes to market to this environment. We've tried partnerships with a big consumer goods company, and funnily enough, we find ourselves in the position where we're pushing to move faster, be quicker, be more flexible, and we just weren't getting that. So we took a step back and said, what's the best way to tackle this? And, as the old saying goes, don't put all your eggs in one basket. We decided, let's partner with startups or tech companies who are specialists in their field. And in doing so, we've created an ecosystem of order generation, capture, and fulfillment. We've partnered with a warehouse specialist, a logistics specialist. And what underpins all of this is technology. There are tech companies that provide a solution to FMCGs. Because of this, we are agile, we're flexible, we can make a change to reporting, tracking as fast as someone can write a code. And in doing so as well, we've gotten quite a bit of on-the-ground experience. A smaller company gets onto the ground, finds people within the communities to work with, and that's invaluable information and expertise. If I throw my mind to some of our less successful ventures with some startups, we've learned these lessons, and sometimes they've been expensive lessons to learn. But I think the biggest principle for us is having a startup that understands corporate governance. As much as we want to operate like a startup, governance is there for a reason. If you are launching an e-wallet solution, do you have the right banking regulation in place?
Right, that makes a lot of sense. You have to have some pre-requirements for the startups to really engage at the point in which Unilever can start working with them. And specifically to access townships or the informal market really in South Africa, what has been a good example of a successful partnership?
We're currently working with a logistics provider called Drop. They are a tech company that provide a logistics solution. They don't own a fleet. They don't employ drivers. They have a driver network who is connected on their digital platform, and it's worked superbly well. They've been able to go into areas, put together networks of drivers. So our Tembisa network is serviced by drivers who are based in Tembisa, and they haven't had to make the investment of buying a fleet of vehicles, hiring a whole bunch of people. They've used technology to provide us an amazing solution.
Right. And is that relationship that they have only with Unilever?
For now, it's only with Unilever. We do plan on syndicating our model. So once we bring on other partners into our model, then we will also bring a Drop into that conversation with the other partners.
Excellent. That's very interesting. Very similar to the work that we have seen SocoWatch doing in East Africa as well, to distribute really the products, and among them Unilever products, to small businesses in informal areas around Nairobi and other markets now. So I know that you're not just operating in South Africa. So I'm curious, of the partnerships you've had, what are differences that you're seeing between South Africa and other markets in the continent? And what do you think that startups in South Africa have to watch for when it comes to partnerships, and specific in this market?
Yeah, so I'm quite fortunate in that, being a part of Unilever, I have access to an amazing network of learnings and business partners. And we've partnered with a Nigerian company called Trade Depot, and they're also a tech startup. they offer a digital solution for selling in these environments, and they've partnered with our Nigeria business. And I've been, able to pick up that partnership and transfer it straight to SA to help us. The challenge with working with a foreign startup is they know Nigeria and they know it extremely well. And so we've had to spend a lot of time helping them understand the South African market. Our trade is very different to the Nigerian market. Distributive trade through Africa is built through heavy distributor networks. And South Africa, that's not the case. We know that we have quite a cash and carry rich retail environment. So understanding those nuances, markets like Nigeria and Kenya, you have more vendors than you do have store owners. It's markets, it's high density. So your cost of your last mile is actually less because you're making one stop, but you're dropping off orders for maybe 50, 60 vendors. But in SA, you've got doing maybe a milk run and you may be getting 10 or 11 deliveries out of a delivery cycle. In your last panel, I think it was Nikki who mentioned it, cash is king in SA.
Right.
E-wallets adoption has been extremely slow. So, you have to be prepared to be patient. You have to be prepared to pay some school fees and stick with it. If you know it's the right thing for your business model, you've got to stick with it, but you have to invest in driving the education and the adoption piece along with it. Digital trust in South Africa is quite low. I'm fortunate that I work with both ends of the spectrum. So even at the top end in the e-commerce world, I still see posts on Facebook where people asking, has anyone ordered from Take-A-Lot? Is it a legitimate site? Can I trust it? So again, it's driving that education and the adoption that is hugely important.
Yeah, absolutely. We've seen exactly the same, and I think that will remain low digital trust will remain one of the critical barriers for these solutions to really penetrate in informal markets. So hopefully, now that we see demonstration cases, and I think actually COVID might be a catalyst, just for lack of a better word, for more digital penetration and to see more expansion of these services. So, but as you said and pointed out, it still remains a challenge. So Nnamdi, if I can go to you in the same spirit, from a bank point of view, how do you see partnerships as a way to reach and better serve micro and small businesses in particular? And what are some of the partnerships that you've tested in this space or beyond, like use cases that you've seen work?
Cool. Thank you so much for having me on your panel at the conference. It's been very exciting so far. As most of your audience might know, Standard Bank, we're a Pan-African company. And our motto is Africa is our home, we drive our growth. With that motto, you can imagine we have definitely we have a significant role to play in the financial services component. And if you look at it purely from a SME point of view, you can have great goods and services, you can have great customers, but if you don't have the ability to pay and be paid, you probably don't have a business. So we definitely have a view on how to get into the small and medium size space. And for us, it clearly means we have to work with partners, typically fintechs, who are solving these problems. And if you look at it objectively, from a banking point of view, most of our assets or most of our presence would sit typically in bricks and mortar infrastructure. It'll sit in sort of ATM type networks, and to a certain degree our POS network, right? But that has limited reach into the small to medium enterprise space. And what we're finding is that they are similar to Unilever. We're finding that there are better people placed who understand this market better than we do. And I guess the way we plan on servicing this ecosystem is through partnerships. And I work in the payment space. And for us is how do we drive payments into that ecosystem. And I'll give you one example, and we can talk about the other later. Most people in South Africa would know of SnapScan, which is a QR code based payment system. I was found out in Cape Town. We, through our strategic investment arm, invested into SnapScan, and if you just have to look at the clientele or the customer base, it ranges from coffee shops who typically not have the POS terminals in their premises, down to even use cases like paying for parking guards, right? People who want to get some you want to tip someone, you can sort of scan a QR code on their chest and you pay them, right? And if you look at that spectrum, that's where digital starts to play a significant role. And I think, pre-COVID, we were always thinking about this, the digital play. How do we extend our footprint and our reach through a digital mechanism? Clearly, we can't roll out more physical infrastructure. The logical play was digital, and living true to our brand. Africa as a home, we have aspirations, at least in the countries we're involved in, to make sure we service not just a segment of Africa, but pretty much every participant in each country we're present in.
Mm-hmm. Yeah, that makes a ton of sense, of course, and as a way also to make sure that the bank continues to grow and stay relevant and reach, actually, as Tina was saying, the primary market, which I really liked as a phrasing and a framing of the conversation. So Namdi, what is the way in which you engage? You said you invested in SnapScan. Is that the primary way in which Standard Bank's partners with startups?
Not really. I mean, we do both. So our approach, I'll give you two. From an investment point of view, we don't consider ourselves your typical VC houses where you're looking for a return. We approach it, the term we use is a strategic investment. So what we'll normally do is find an ecosystem, take maybe a trader or logistics ecosystem. We think we want to play along the value chain, and then we find participants along the value chain who are solving the problem. And you've given SnapScan as an example, it might be this SME space. And our view would be then, how do we strategically partner with these fintechs? And strategic doesn't just equate to investment. It would be access to corporate banking. It would be access to leveraging of our regulatory license. It would be access to other markets, etc. And the business units who then those fintechs fall under will work very closely with the strategic investment arm. As we hit milestones, we sort of increase our stake in those businesses. That to a certain degree, at some stage, we hope that the partnership is successful and we're very deeply integrated. I think that's one approach we take. In certain instances where we think there are too many players who already solved at least fintech have solved the problem, clearly for us it's a partnership play. Remittances might be a good one. There are lots of companies doing remittances around multiple corridors. And in fact, I'm heavily involved in that space, and we take a partnership approach, whether it's with the likes of Western Union and the MoneyGrams of World Remits and local distribution partners. And what we do is find very deep partnership integrations in those markets to make sure we're serving our customers. The end goal, and it probably sounds like a overused phrase, but it's all about the customer, right? And what's the pathway to delivering the kind of banking service that the customer requires? And to a certain degree, in our world with financial services, from a customer perspective, whether it's an SME or an individual, the experience with banking is there's a small time frame, right? It might be 2 minutes where you're either putting in your card or exchanging digital payments, and you never really think about it. You only really think about it when the experience goes wrong, and that's when you call the bank.
Very true.
Yeah, so we make sure that's key for us, right? In those integrations, and we're almost like the behind the scenes. How do we power both the SME and the consumer to get that the value proposition that the end user is looking for.
Fantastic. Yeah, sounds like a very thought out process. Like you have different ways of engaging to achieve your goals across several use cases, which is, I think, a state at which various banks, and we work also with, second tier and smaller actually microfinance banks aspire to. And so it's very interesting. But let's hear it also from the startup point of view, because I know that Merchant Capital, Ryan, has partnered with Standard Bank. And so Ryan, your solution is actually serving customers in the townships, including taverns, I think, and large spazas. You can tell us more about that. But can you tell us about the partnership and what it has enabled for Merchant Capital?
Sure. Good afternoon. Thanks for having me on. So our journey with Standard Bank started 2018. And at the time, I was doing lots of stakeholder engagement at different levels in the bank. And I used an analogy consistently to articulate why partnerships with banks and fintechs work. And I'm not sure if everybody on the webinar is familiar with the movie Transformers.
Probably.
Anyway, okay. So in the movie Transformers, there are two key characters. There's Optimus Prime, and there's a character by the name of Bumblebee. Now, Optimus Prime is the stoic, resolute, mature and conservative leader, while Bumblebee is this impetuous, risk-taking millennial type. Although they are very different, as the series develops, so the relationship and respect between the two parties comes to the fore because they're both bringing such value to the party. So I'm sure you've worked out that Optimus Prime would be representative of the traditional lender and Standard Bank, and Bumblebee is symbolic of the fintech and Merchant Capital. So I think, like for me, why it works is because each party is bringing something useful to the table, and what you'll end up getting is this 1 + 1 = 3 if done right. And I mean, maybe clicking down into the next level. I mean, really, what do banks bring? They bring customer scale, a trusted brand, robust infrastructure, experience and expertise, and by design, they're more risk averse. Where if you look at it through the lens of the fintech, it's all about agility and simplicity and speed and convenience. By design, we have a bigger risk appetite. And our mindset is disruptive. What we like to try and do is take stuff that's happened in the bank for the same way for many years and simplify it. I think for us, what we liked about Standard Bank, and it resonated with us from the outset, is that Standard Bank is partnership orientated. They know what they're good at, and there was really a good chemistry. As a result of that, I can safely say it's been a fantastic journey to date. And what I can see is that it's only getting started.
Very nice to hear it, Ryan. I think in other cases, it's definitely not the story we hear from such a success perspective. So it's great to hear it. But tell us a bit more about what did it take to get with Standard Bank? So there was alignment. There was definitely a meeting of the minds, it sounds like, and the objectives were aligned. But we know it's a very sought after partnership and partner for many of our companies. So I'm sure many of the startups in the room want to know, like, what did they ask you? What did it take? What did you need to have in place to make sure that it actually worked?
Sure. So I'm going to I'll take a little bit of a step back. So it was probably early 2018, and we had a rapidly growing business. We had comfort that there was product market fit. We were consistently writing more and more business every month. Our existing clients were coming back repeatedly. There were two questions for us when it came to how were we really going to scale this thing? And there were two primary options on the table. So the first thing was we build out a big direct sales team, which comes with pros and cons. The second option was the idea of this one-to-many strategy via strategic partnerships. And this was the route that a number of the very successful international players in the alternative lending space had taken. So for us at a business DNA level, the strategic partnership play we felt worked best. So we went through a lengthy process of discussing ideal partners. And I mean, after iterating a lot, first prize for us was trying to land a big five traditional lender in South Africa. So I mean, you hear stories, but genuinely there was some synchronicity, some timing, luck, you know, the usual. At the time, there was a lot of buzz around our value proposition, which is called a merchant cash advance. And one of the other banks in South Africa were in the final throes of launching a competitor product to ourselves. At the time, Standard Bank was also in the process of developing their own merchant cash advance offering in-house. So what happened was there were some compliance and regulatory challenges that the bank was having, struggling. I mean, they were struggling to solve them. However, the notion was that they would eventually get around it. One of our shareholders, which is a business called Rand Merchant Investment Holdings, actually made the introduction to us for us with Standard Bank. And what we agreed on was entering into a champion challenge type arrangement, where we would both take our offering to an earmarked segment of the Standard Bank customer base, and we would see who would be more successful. In the end, this never actually transpired, and instead Standard Bank didn't launch their own product. What we landed up doing was entering into a pilot arrangement where what they said to us was, guys, you've got 12 months, see if you can fund 100 deals. And ultimately what landed up happening is it was a very successful pilot. We were able to fund 100 deals in less than 8 months. And what this did was it fast-tracked our relationship. So from a pilot relationship, we accelerated into an equity agreement, and Standard Bank are now shareholders in our business.
Fantastic.
Yeah.
And as you said, like it could have gone in many different directions with a competitor and any in-house potential product that could have competed. So we have this saying in our business that it's very important to make sure that you've got a ticket to a number of games. We're really glad that we were able to get this ticket. Right, diversify to increase the odds of success. Absolutely. And Ryan, last question for you, but how is Merchant Capital today expanding to service more spaza shops and traders? Is that a segment that you hope to service more in the future?
Yeah, so I mean, we all know that there's this massive funding gap in South Africa. I mean, depend where you read, there's anything from between 300 to 600 billion rand. We as a business are an alternative lender to retail SMEs in South Africa with a strong tech underpinning. So maybe just to give you context, we funded about 5,000 businesses. We've deployed close on 2 billion rand, okay? Our core product is really what we're able to do is to provide a business with up to 100% of their average monthly debit and credit card turnover to use as they see fit. And the real guts around the product is really that repayment happens through the point of sale in line with how business turns over. My view is that working capital is like air for business, and it's not superstitious. It's as important for a small business as it is for a big business. We have a retail portfolio which spans across the spectrum, and probably about 5% of our portfolio is in the tavern, liquor, spaza, supermarket, and cash and carry space. We've seen that during this time, it has actually been a resilient part to the South African economy. And in the ordinary course of business, what we have seen is that you've got a highly engaged entrepreneurial operator who are loyal. So if you take care of them, they will stick with you. And we are, with the return to a semblance of normality, it's certainly a sector that we want to continue funding into and assisting these businesses to grow.
Right. I think that was a message super clear in the previous panel as well, in terms of the need for working capital, and more so now to really support these businesses, because otherwise it's going to be a long road to recovery, per the title of this session. Great. Well, super interesting story and trajectory. I'd love to hear now from Namdi and Kamisha, both of you, whoever wants to take it first. But we heard, I mean, Ryan seemed to be, they seem to have been a bit of a poster child. Things were squared and in order when they picked up the partnership. But typically, what would you say are the, like 5 key things that startups need to show you for you to even consider a partnership? Or even top 3 if you want to keep it shorter.
I'll probably pick up just because Ryan's mentioned Standard Bank, and I clearly know Merchant Capital and our working relationship there, and he definitely did summarize what the viewpoints are like from a fintech point of view. You can see there's definitely an element of preparation, there's an element of timing in there, and I'll give the perspective from a banking perspective. To give context. So I'll use an example of remittances or diaspora banker, which is one of the projects I'm working on. As you can imagine, being in 19 odd countries, we've got to do a lot of research around the right partners to work with. And if I was using diaspora banking or remittances, there are probably only a finite number of fintechs that once we've done our research, we see that fits the bill. And typically fit the bill is you've definitely moved past idea stage.
Right, of course.
Yeah, it's great. There are probably 1,000,001 companies with idea stage. There's only a finite number that have gone past that. We've got a product and we're looking to scale. I think that'll be the first thing I would encourage fintechs before approaching a partnership. Prove that your business model works, because then it's an easier conversation, especially when you're speaking to a potential investor, a potential partner, like a large corporate. If you're speaking to a bank, that's what we do, into the numbers. So we want to see that, right? The second, this is more personal advice than anything, is I would say also figure out the business model in case the partnership doesn't work, right? So if there were 17 or 20 odd partners from our work that we find probably fits the profile, we're clearly not going to partner with all 17. There's probably a smaller, maybe 10% of those we'll partner with, right? Then what happens to the other 90%, right? So they default over. So as a starting point, I guess that's business 101. Make sure your business works anyway without a partnership, and the partnership should just help you accelerate that vision. And I think that the last point I would mention is this is oversold. It's all about the customer. It really is oversold, but I think I can't stress that enough, right? If you do have a value proposition, to a certain degree, you might not even need the banks, right? Because the customers just flock to your product. And in a weird twist, the fact that customers flock to your product make you more attractive to us as a bank, right? And the partnerships we've seen, let's use Merchant Capital as an example, right? You can see the numbers just start growing, and you're solving a real need, you're providing working capital, then becomes a no-brainer, in order for us to move. We've seen some partnerships where the numbers don't stack up. You're probably trying to get to break even, and if this partnership doesn't work, then your business falls over. It's hard to say let's do that, as with any business, right? It's not just a Standard Bank play, right? And I would definitely encourage a lot of fintechs to think that way, because the pool in reality is finite for investment, right? It's not, you're not going to invest in 101 companies. And the reason we have those two strategies that I mentioned before about the strategic investment approach and the partnership approach is that the partnership in principle works regardless of an investment, right? So whether you're a small business or you're a large fintech, you still probably need banking services, right? So we still want to provide you with access to corporate bank accounts, etc., which we're starting to use as indicators for us also for viability of a business. So if you see access to your working capital needs, your access to your transactions and etc., clearly for us, that those are good indicators also.
Right.
And those are probably the top three things I would recommend for fintechs.
Got it. So it's really about the numbers. So you're looking for volume and scale and proof points and a certain level of traction, which, as we know, is a bit of a chicken and egg with earlier stage companies to get that first foot in the door of one partner, and then can bring in more partners because they need one for the other.
And I guess to a certain degree, that's why entities like Catalyst Fund exist, right? To help us sift through and help those fintechs get through that journey, right?
Right.
We'll be lying if we said that's our business model. That's not us. But definitely, you get to a point where there's enough of a need to warrant us stepping in. We definitely will be there, but we're not an accelerator startup hub where we're trying to sift through genuine ideas. And that's, if you look at merchant capital, we do that ourselves as well, right? So we try to build ideas, and then we get to a point where is it easier for us to build it ourselves, or is it easier to partner?
Yeah. That's very true, though. I mean, we have actually identified that need, like the corporate readiness, as a key area that startups need support on. And so we've incorporated that into our venture building modules, and we help on both sides. So on the one end, helping the corporate think through the innovation journey, what are the opportunities, and on the other, helping the startup understand the requirements, and then, making sure that the road to partnership is shortened somewhat.
Perfect, that's it.
So Kamisha, would you add anything to those top three criteria? Is it a bit different for you?
I'd add two more to bring your list to the five you wanted to start with. And it seems intuitive, but for a startup to make sure that they have a good legal person in their team or on their side to help them when it comes to contracting with corporates and things like that goes, don't count on the corporate. As Unilever, we've got a very strong moral compass, and we would never contract to the detriment of our partners. But it's very important for the startups to ensure that they're getting the best legal advice to make sure that the contract serves their purposes. And the last one would be making sure that the governance checks and balances are in place.
Yeah, as you were saying. Yeah, of course. Great addition. We got to our 5. Thank you for that. So question for you, because obviously we can't hide the elephant in the room, but I'm curious, with the onset of COVID-19 and the impact this has had, as we heard earlier, on small businesses in informal economies, but also on corporates and other businesses more generally, what do you think that this will mean for corporates and corporate partnerships? Have any of your strategies changed because of COVID-19? We've heard from some that they put the brake because of limited resources, and others that are actually doubling down. So what's your take?
For us, actually, COVID-19 has been, how can we move faster? Right. We're definitely not in the space of pressing pause or relooking our relationships with our startups. COVID-19 has provided us an opportunity to also look at our model, look at what other aspects can we bring into it. At the beginning of lockdown, we were quite unsure as to whether our sales reps would be allowed back into trade, how would we get deliveries back on, and we had to pivot our model. We've brought in a call center model where we're trialing a person phoning our spaza stores on a weekly basis to see if they can place an order. It's forced us to be a little bit more creative, I think, in our thinking. And I think with this trade as well, and there's always a lot of fear in this environment. So, the thought of going to a cash and carry, standing in the queue, it makes people uncomfortable. We've got a large community of foreign traders who tend to be quite uncomfortable in these, government regulated times. And so they have actually responded quite well to our model. We've seen our order repurchases going up, where they are now in a space where they're testing and trialing different ways of getting stock to their store, because the spaza store has now replaced the weekly trip to the mall or the supermarket because of fear of being in exposed areas or public transport. So for us, it's definitely not a slowdown. It's how can we move faster in this space.
I couldn't agree with you more. It's for me, it is really an impetus and an urgency to move faster as well. And Namdi, what about in your case?
Similar. We found this a validation of our business model. So prior to COVID, we always knew that we need to pivot to digital. We always knew that the branch network probably isn't the future of banking per se. If we want to achieve our goal of Africa as a home, we drive a growth. And what we saw, and I'm sure Ryan can say the same, we saw exponential growth in all the partnerships and fintechs we invested in. And I'll give you a particular one that I'm working on, that I've been working on for the past couple of years, which is in the remittances and diaspora banking sphere. So with the advent of lockdown, you can imagine people outside the continent who want to send money back home will just have no means of doing that, right? Because the branches are closed to, you can't go receive your cash in the branch, or if you're using Western Union or MoneyGram, you can't go to physical locations to get your cash. And what happens is you still have to send the money home because the need is still required to buy the groceries or pay for even medication. And we saw a massive pivot from physical infrastructure to digital. And that was an example of us realizing that our path, or at least the vision we had was on track. And in certain instances, to give an example, in Nigeria, we're starting to explore on the back of that, how do we provide additional digital services to the foreign nationals? Think savings, think insurance, because now you've validated the business model, and we've seen that across, right? And I think, when Ryan comes on board, he'll probably attest to that. In terms of COVID, we found it positive. I guess that the challenge would be for those who are only pivoting now, right? It would be very difficult to pivot in a crisis because you change your entire strategy.
Yeah, actually, on that call for Ryan to jump in, I'm curious because you've had positive and urgent message of accelerating digitization, but Ryan, how has it been for you as a growing business? Have you had to make any significant adjustments? There's a question actually from Matt Ganser in the chat about this. Did you have to adjust your algorithms to tailor them maybe to specific segments of merchants? And I'm also curious of if you had the opportunity to maybe form more partnerships in the COVID-19 context.
Yeah, it's a very good question. So when COVID hit, I mean, we split our portfolio into two business types. One was essential services, and the other was non-essential services. We made a strategic decision in the business to provide payment holidays to non-essential businesses for the full period that they weren't trading, and it was a big decision for us, and it was the right decision. What you saw was a material uptick in turnovers that were going through essential businesses, and that informed some of our thinking when it came to the development of new partnerships over the time. If I had to have a look at our existing partnership base, there was really two approaches. So you had certain partners that effectively turned themselves off, and what they wanted to do was focus on their core business and ensure that their house was in order. Then you had other guys who still engaged, but they were far more reactive, and I think for all the justifiable and appropriate reasons. Then from our side, I mean, we identified it as an opportunity. I mean, we worked incredibly hard and identified certain areas where we believed that there is opportunity. I think what COVID also did was, when you're in the ordinary course of business, you know that there are things in the background that you should be doing, but you procrastinate because stuff's going well. When the proverbial hits the fan, what you have to do is you've got to dial up your hustle, right? So what we did was we did exactly that, and we've got two very exciting partnerships in the healthcare professional space that we're going to be launching over the coming weeks, which is it's a very exciting sector, and it's been a sector that I think has been materially impacted by COVID. I don't know about you guys, but a lot of people were reticent to go to their GP or their dentist over this time. So we will be launching a very exciting automated credit product there. And then there is another very exciting partnership that will be coming on in the food services space. Another sector which has been the lifeblood of our portfolio up till now, which was materially impacted over this time, and will return. But I think while let's call it our traditional methods of servicing will remain, there has definitely been a greater investment from a cash and time perspective into the digitization of our operating model.
Thanks for sharing that as a sneak peek. We're excited to see the announcement. That's great that you're launching these two partnerships in the health sector. I was speaking with your co-founder Dov a couple of days ago, and he had hinted at it. So it's great to hear it's going through.
Did I tell you more than he did?
Slightly. No, that's good. That's great. Great to hear. And it sounds like all across the board, it's been more of an opportunity, as you said, an opportunity to dial up the hustle. We've seen that across our portfolio of companies too. Pretty much all of them had to obviously take drastic measures to continue, extend their runways and continue to operate. But some even took a step further and either formed partnerships, launched new products, pivoted their businesses in ways that could be more successful, like you were saying, forming partnerships in the health space, for instance. So I keep mentioning them, but one that I loved in particular is what SocoWatch did in Kenya, where they launched an e-voucher service for underserved communities in township areas to access essential products via technology, so via the e-vouchers, at what they call dukas, so the equivalent of smaller spaza shops in South Africa. And that was all very quick and in response to COVID, and has really improved the food security of thousands of families in that area. So I think it's extremely inspiring what all of you innovators have been able to do in spite of this pandemic. Really impressive. So we have, unfortunately, only a few minutes to go to the event and a lot of questions in the Q&A. So, and please keep them coming in the audience. I have one final one for you all to take around, and then we'll take some of these questions. What do you see as future opportunities to serve micro and small business in the informal economy over the next few years? And I'd like to hear from all of you. Maybe Kamisha, you can start.
Yeah, I think if I think of the work that we're doing in this space, our biggest challenges are, I've spoken about the cash is king, the cost of data in this environment. South Africa has some of the highest data costs in Africa. So launching a digital platform or going into some sort of digital model comes with its challenges there, because if I have £5 to spend on data, am I going to spend it on going into an app, or am I going to spend it on a WhatsApp call to my family? So I think we've still got a lot of room to go in that space, in finding solves and solutions for the accessibility to technology. There are smartphones in a township environment, but are they in the right hands? You know, the
Right.
majority of smartphones are in the hands of 15 to 24-year-olds. Those aren't your business owners. So I think there's quite a few challenges from that aspect, where within those challenges, there's opportunities for us to solve.
Mm-hmm. Great. Namdi, I saw you were unmuted yourself.
Yeah, no, I thought you wanted me to go first then. I think you know, banking in general has a significant role to play in the SME space. You know, I'll use a very cheeky analogy. You know, if Africa was a teenager, you would have banking or banks as the uncle who's responsible for the pocket money. And that's how we sort of look at it, right? Regardless of the form factor, whether the form factor was kind of, you go look at the history of money, started with cash and started with barter system, then it moved to paper, it moved to plastic, now it's gone to digital. That regardless of form factor, that requirement still exists to be able to provide the underlying transaction elements for the continent, right? And you know, if you look at the unemployment rates in South Africa, in across the continent, South Africa sitting, I think, is under 30%. You will see that the financial industry as a whole has a significant role to play, right? To make sure there's still liquidity in the system. And I think SMEs, you know, are a lifeline, right, for any economy. There's only a finite number of large corporates who can employ a finite number of people in the economy. That SMEs are the ones who drive new growth, right?
Absolutely.
So it'll be very remiss of any financial institution not to participate in that space. So that's our role. And I see some other questions which I might expand on. But banking, and definitely Standard Bank, has a significant role in the SME space, which we definitely do at this stage.
Absolutely. And Ryan, last but not least.
So I'm not really close to the detail here, but I mean, what I understand, there's a huge demand for data and financial services in this model. Picking up on what Kamisha said, I think cash is king, but obviously what it does come with is significant risk. So if traders have the ability to accept debit and credit card payments, I think that would be very important. I think also the ability to withdraw cash from e-wallets on behalf of people coming in store, which will allow the store to effectively become like an ATM machine. I think that's interesting. I think one of the challenges are that a big portion of these traders aren't South African citizens. So there's a different kind of credit risk which needs to be solved for. At this point in time, I think a lot of the services are either out of reach or in the process of being developed. And I've come across two interesting companies. One of them is a Standard Bank business called Trader. And then a good friend of mine owns a business called Cellpal. And both of these guys are doing really interesting stuff in the space. And from what we heard from the previous panel, so are many other companies. So I think it is it's an interesting frontier, and the guys that really get it right can do really, really well, not just for themselves, but for the wide informal sector who would benefit from getting access to the stuff.
Completely agree. So we're unfortunately at time. So let's take a few questions and then we'll wrap up, hoping that people can stay on a couple more minutes. So there is actually a very interesting one from Andile that I'd like to ask to Namdi. So Standard Bank has also partnered with players like Founders Factory to build and support startups, right? And do you see that as a sustainable way for corporates to engage with earlier stage businesses, for example, and de-risk basically that relationship?
The answer is yes. So remember what I mentioned before. Whilst I sit on the retail side, on the payment side, we still are a bank on the corporate side as well. We support large organizations, and we'll support organizations similar to yourselves, whose business is to support startups, right? So that's one way for us to partner, to be involved in the ecosystem. And as Andy mentioned, we partnered with Founders Factory, I think last year, the year before, to effect exactly that, right? So that, I think there was a bit of cash we put into Founders Factory, which then would be dispersed to the startup ecosystem. That's one way to look at it. The second way, clearly, we also have a vested interest in making sure that ecosystem thrives. Because if that ecosystem doesn't thrive, we don't get enough deal flow that comes up the chain for us to invest in. So it's a no-brainer in my books to participate in these conversations. Otherwise, we're stuck anyway. I guess what we don't want to happen is where the ecosystem and the content doesn't thrive enough that there are external players who then come in to disrupt the content, whilst we have enough intelligent and clever founders, like the panel before. How do we support that ecosystem? Especially, I was very pleased it was all female founders. How do we support those kind of innovators, whilst we might not be able to directly do it in terms of the partnership per se at that later stage? Clearly, have a role to play, like I mentioned with Founders Factory.
Yeah, and on that note, on ecosystem, this is a question for all of you from Shamima. I think all of you mentioned that cash is king, that it's still going to be very difficult to reach SMEs in the informal economy, in the township especially. So especially with a strong focus on technology-enabled solutions, which we know it's the future, but there's still a long way to go in some markets. So with a strong focus on technology and innovation, how do we bridge this gap between wanting to innovate and having to rely on technology-enabled solutions, and yet also serving the immediate needs, like in the shorter term, of a large percentage of the population? Does anyone want to take that?
I can go first. I see the others are muted. To a certain degree, it depends on how you look at it, right? And it's definitely easy to jump on the bandwagon that cash is king and it's expensive, and it is true, right? It is quite expensive, but to a certain degree, cash is also a very durable product, and it's survived for decades for that very reason. And there probably are positives to cash that I'm going to give an example where cash might be a competitive advantage for a potential client. So imagine you're a client, you're a large corporate or you're fintech, and you've successfully figured out how to play in a certain arena and you accept cash. The reason why you don't have many competitors in that environment is because it's very difficult to get the cash or to go pick up the cash, right? Once you digitize it, all the competitors come in, right? So if you look at it from a strategic point of view, cash isn't that bad, right? But clearly it's got a lot of benefits as well. So we have the same. We know cash is expensive as a bank, and part of what we do is how do we move that journey from sort of cash to digital to whatever it is. The form factor for us doesn't matter per se, but how do we make sure we're part of that ecosystem? I think ecosystems make perfect sense as a play. And the way we approach ecosystems is to make sure we firmly understand it. So if we're looking at, say, Unilever, like how do you understand the entire process from producing the product to delivering it, right? And a couple of the panels have mentioned data. And for us, data is king, right? So imagine if you're a large corporate manufacturing milk, as an example, and we provide you with working capital. We provide you with logistics, working capital for your logistics. We provide the SMEs getting the milk with
the value chain approach.
The value chain, we see that, right? Yeah. And we've got the data. We've actually got the data, and I think that's where, as a bank, we're moving to. Yeah, we've got this incredible data that we want to leverage off to make sure, regardless of whether it's cash, to make sure we're providing customers, whether they're corporate or individuals, the right level of service.
Kamisha, I saw you unmute. You had something to add.
Yeah, you know, we've got a saying in our team. We fall into the new business models. We've got a saying in our team is that we're building the plane as we're flying it, and I think that's the approach that we have to take. You know, we know what our end goal is. We know we want products available to citizens in this environment. So, you know, with everything that we've done, we've had to learn how to be very, very agile. You know, I was a part of a summit recently, and there was a really great learning that came out of it for me is we're a business that was built in the 20th century, but we have to learn how to survive in the 21st century. So keeping our eye on that prize and being agile has been very important for us. Shamima did ask another question that I wanted to answer around local production of goods. And I can very proudly say that as Unilever, about 90% of our portfolio is actually manufactured locally. And we only have about, I think it's between a 10 and 5% leeway for international import of our goods. So all our products are
fantastic.
homegrown.
And I think that is a great point to end. Your point about we gotta fly the plane as we build it, because as we know, it's gonna take time to find the holistic set of solutions that are needed for the entire population, especially the most underserved. But we have to try and slowly build them up. And it's a trial and error, and you have to be agile. I think here in this ecosystem, we're all at least striving to do that. So very, very much agree with your point there. And I think with that, because we're already over by 8 minutes, I'll hand it back to Lebo for the conclusions. But thank you to the wonderful panelists, the previous as well, and for everyone to attend. Thank you all.
Thank you. Thank you very much.
Thank you.
Thank you so much, Melis. And thank you to everybody who's joined us here today. Sorry that we have gone a little bit over time, but we'll ask for another 30 seconds of your time just to do a survey to understand how you felt about this event, whether we provided value, right? And here we go. How would you rate today's session? 1 is you found little value, and 5, you found it very insightful. Okay. Andile and Malis, it looks like we did well. So with that, thank you so much for all your support. Thank you to our investors. Thank you to our funders. Thank you to AlphaCode. Thank you to the regulators. Thank you for everybody who has supported us in driving inclusive growth in South Africa, as well as all the emerging markets that we operate in. Please do get in touch with Catalyst Fund, as well as myself, Lebo Mokhabudi, should you want to join our circle of investors, our circle of corporates, as well as be part of our portfolio. Happy to engage with you and look forward to making this, to doing more of this, right? Looking forward to collaborating more beyond this dialogue. Thank you and goodbye.